Inflation numbers have come back and they are absolutely astonishing. Lebanon at 211% inflation, Zimbabwe at 192%, Venezuela at 167%, Turkey 78%, Argentina at a 60.7%. Now that means if this rate 60.7 continues to stay at 60.7, even if you have a 60% return, let's say you invested in the stocks and you invested in Argentina stocks and it has a 60% return, you are actually lost value in your portfolio, even though you did 60% because they debased your currency. Now, where is the United States? United States is all the way down here at one of the highest rates in over 40 years in the United States at 8.6% inflation rate, which is pretty large in the United States. And it's actually really sad because a lot of people just focus on, because they live inside the United States, they just focus on the United States inflation. Well, what about all these other people that literally have, double digit, triple digit inflation rates? It is really sad because their currency just becomes debased. And this is what they end up with is 100 million, 10 billion, 5 million, and 10,000 bill units where they have to use these units. They have to make them so large because they print so much money because they've debased the currency because they have no discipline with their monetary policy, which we are starting to see the United States get exponentially worse, which I'll talk about here in a second. And if you look at it in Zimbabwe, it's actually really sad. This is $100 trillion right here. Is one bill. It's $100 trillion. They literally have to take wheelbarrows of money to grocery stores to buy regular goods. That's actually really, really sad. Can you imagine? This guy is not actually happy. He's probably really pissed off carrying an entire wheelbarrow full of money just to go shopping at a store. Now, I'm not saying this is going to happen in the United States tomorrow, but if we continue to debase our currency, it's getting worse and worse, which I'll show you here in a second. But what you really need to understand is the history of money. So out of 775 fiat currencies, 0 were actually able to hold their value. Okay, the average expectancy of fiat currencies is actually 35 years. That's the average life expectancy. The British pound is the oldest fiat currency at 317 years old and now has 1/200th or 0.5% of its original value. Erosion of the purchasing power is getting exponentially worse. We actually printed more than 1/5 of US dollars in 2020, and that was actually even higher in 2021. And we are yet to see the worst, as CPI does not actually reflect real inflation rates, because if you know anything about the CPI, it's just a basket full of goods, and that basket full of goods is actually priced, like some of the goods in that basket is like milk and funerals and museum tickets and a bunch of things that don't actually matter. Meanwhile, rent is up 40%, and they're looking at a museum ticket during COVID when you can't even go to a museum. And actually, how they figure out what inflation is they will physically go to certain businesses and stores and interview them and ask the business owners about price changes, when they could have just used merchant accounts to figure out like huge merchant data and actually figure out what true inflation rates are, and maybe look at the titles of housing and all that stuff. But instead, they go with a clipboard to a store to figure out if inflation is higher. So everything is based on the CPI rate, which we think it's 8.6% in the United States, but it's likely much, much higher. So here's what you really need to understand is the amount of money that we have increased, which I just showed you in 2020 and in 2021. This is how exponential M2 money supply is in the United States. We have seen an exponential increase because of the pandemic, and it is not slowing down because we are addicted to printing more money to get ourselves out of a weak economy. So the United States is absolutely stuck on printing money. The only thing they can really do is decrease inflation or decrease interest rates and print more money. That's pretty much the only thing they can do to try to stimulate the economy. And meanwhile, when they stimulate the economy by printing more money, they are really just debasing your currency and making you lose value. Because what inflation is too much money chasing too few of goods and services or assets. Okay, it's traditionally measured by the CPI, like I mentioned, and this is what it actually looks like over here on the right. When you increase supply out to the right, you see the new equilibrium price where demand is, the price actually falls. So the value of your currency falls. Even if you have, $100 in your bank account, that $100 isn't going down to $90. It still remains $100, but now you can buy less goods and services in the future because they have infinitely printed more supply of that currency, which brings that supply curve outwards, which means that the equilibrium price goes down, which means that they are debasing and devaluing your currency. Okay, inflation allows the government to pay back their debt easier because it's now cheaper. So if we're over $30 trillion in debt inside the United States, our debt to GDP is over 120%. And what the government is doing is, now that we have 30 trillion in debt, they're like, okay, let me print more money. That'll devalue the debt. I can use the new money that we just printed to actually pay back the debt. So meanwhile, they took on a bunch of debt that they now can't pay back. So they print more money so they can pay it back easier. But really, it just kills you and kills your wealth, because inflation is truly just a silent tax that erodes the wealth of the people, aka you watching this video. So the wealth gap continues to grow because the wealthy understand that this is pretty much guaranteed. Okay, in short periods of time, there can actually be deflation where the currency gets stronger, but over long periods of time, the Fed, okay, purposely aims for the currency to go down in value by 2 to 3%. They purposely aim, their goal is to actually inflate the currency 2 to 3% per year. Now that has obviously been 200 to 300% higher than what they actually aim to do over the past year. And it's not going to slow down because, again, they are absolutely addicted to it. What people really don't understand is we've actually been on a 50-year experiment on something called, or off of the gold standard. So the US dollar used to be pegged to gold, and President Nixon in 1971, on August 15th of 1971, he announced that the United States is going off of the gold standard. So now the United States dollar is open to just trade freely with other currencies, and there's no actually asset or commodity backing the US dollar. So now there is absolutely nothing behind the US dollar, and that allows the Fed to just infinitely debase our currency by printing more money so they can stimulate the economy in a short sprints. But then meanwhile, long term, it absolutely smashes everyone that has US dollars and has fiat currencies. So the biggest thing and why the wealth gap continues to grow is the wealthy understand that they have got to invest their money into assets that exceed the rate of inflation. If you do not do that, you are losing your money, okay? That's why people that are working for like $15 an hour, okay, they're working for $15 an hour their whole life. They've got active income. They're just trading their time for money. Well, if they continue to not, pre-pandemic, they're making $15 an hour. Now they're really just making like $10 an hour, okay? Because now their $15 an hour can actually only buy really like $10 worth of goods relative to what it used to be worth prior to the pandemic. So this whole pandemic thing has made things exponentially worse, and it does not appear to be slowing down. So what is the solution? Is to buy assets. Some of the assets that I believe in that are the best inflation hedges is real estate, and secondly, Bitcoin, okay? Because Bitcoin is the actual truly only decentralized cryptocurrency where there's no central party that controls it, okay? It has a limited supply of 21 million coins. We are already at 19 million coins released. And over the next about 118 years, the next 2 million Bitcoin will be released. And no one can make that happen any sooner. No one can actually like independently say, oh, we want $27 million or 27 million coins. It is capped at 21 million, and it is called disinflation, where Bitcoin actually inflates, but it slows down its inflation rate over time because it is programmed in the protocol. So it's just a piece of code that cuts the supply release in half every year. So there used to be 900 Bitcoin released a day. Then there's 450 Bitcoin released a day. Then there's 225 Bitcoin released a day. And that supply gets cut in half just about every 40 years until we finally get to the point where there's a total of 21 million coins. And again, we only have 2 million left to go over the next 118 years. Okay, so buying Bitcoin is like buying property in cyberspace. That's how you need to look at it. Unlike precious metals, we know exactly how much Bitcoin is released a day. There's actually speculation. Apparently, it's true that there was just a ridiculous amount of gold that was discovered in Uganda. I believe it's like $10 trillion worth of gold was just discovered in Uganda. That does not happen. You can't just find 40 million Bitcoin in someone's wallet. Okay, there's only ever going to be 21 million coins, and again, 19 million have been released. What you really need to understand is the importance of Bitcoin is it's immutable, which means it cannot be changed. Okay, no one can say, oh, again, I want 40 million Bitcoin instead. Okay, it's censorship resistant. No one can take and stop you from using Bitcoin. So no matter how many governments ban it, if your mom or your uncle or your dog says you're not allowed to use Bitcoin anymore, guess what? They can't stop you. As long as the internet and technology is around, you can transact Bitcoin at any point in time, and you can carry it anywhere in the world, even without your phone. You can actually just keep a seed phrase in your head and go across borders, go all the way across the world, and carry your Bitcoin with a seed phrase remembered in your head, because you can just go online and you can just type in your seed phrase into a software, and your Bitcoin can that would then open your wallet, and you can have access to your Bitcoin. So that's how simple it is to carry your Bitcoin anywhere. If you just heard the news, Peter Schiff just got his bank accounts closed down. He said he did nothing wrong. Apparently, he had a lower minimum balance than he needed to have in Puerto Rico. And now what's he going to do with his millions and millions of dollars worth of gold? Is he going to pick all of his gold up and carry it across borders and go open a different bank somewhere else? Probably not. If he does, that's going to cost him millions and millions of dollars to go carry that gold somewhere else. Okay? And it's also transparent, right? We know exactly how much Bitcoin is released every single day. And we know how many Bitcoin is in supply, and we even know what wallets are holding Bitcoin. We can see all this data because it's run on the Bitcoin blockchain. It is absolutely as transparent as it gets. And now, as a store of value, people probably saying, well, how can Bitcoin be a store of value if it's gone down 70% this year? Well, because it's had over a 100% compounded annual growth rate since inception. So it has grown by an average growth rate that is compounded over 100% per year since inception. So despite it going down 70% this year, again, it's still at a 100% compounded annual growth rate. Okay, and I really think it's going to probably be something like gold in the 1970s, when we started to have, people started to look around and be like, oh, wait, the US dollar is not pegged to anything yet in 1971, right? This was 1971 was right here when we went off the gold standard, okay? And then what happened to gold after we went off the gold standard? People started to realize, uh-oh, what's going on? It went up 386% in 74. Then it came down and had a really big capitulation, which I think this was like a 50% capitulation right here. Okay, gold came down, yep, about 49%. Okay, and then what happened? It just absolutely erupted from that to almost 800% return in the next 1,239 days. And then you can see it consolidated, and then once again it is absolutely taken off, because people realize that, okay, I need assets that are not able to be infinitely printed, that can be somewhat of a store of value that's not controlled by a central party, because all these central parties really screw things up over time because they're irresponsible and they're not disciplined. Meanwhile, Bitcoin is likely a much, much better store of value. It's just super, young. It's 13 years old. Okay, we haven't even had a market cap over $2 trillion in Bitcoin. And meanwhile, gold's been over 10 trillion for a little bit now. Okay, and gold is, thousands of years old. So people need to realize Bitcoin is likely at its very beginning phases. Okay, this was Bitcoin back in 2011. People are really worried about it now, but if they just zoom out, they can realize, oh, wow, this actually has gone up quite a lot, despite, once again, the 70% drop down to 19,200 $200 right now. I do think we're at a very interesting time with Bitcoin right now, where and all these inflationary metrics that are coming out that are absolutely ridiculous. We've started to get some understanding that Bitcoin is no longer potentially a security. It is actually deemed as a commodity. The SEC just came out about 3 days ago and once again confirmed that Bitcoin is number one, decentralized. Number two, it is a commodity. Okay, so it's right in there within the same asset class as gold. It's deemed as a commodity by the Securities and Exchange Commission. And once again, I do believe that it is likely to play out somewhat similar to gold in the 1970s. It can be pretty choppy. There could be a big U-shaped recovery, but eventually, I think this asset, as we move into a digital economy and globalization becomes realer and realer every day, and people understand that fiat currencies are not the answer, eventually, I think we do. There's a pretty decent potential that we move to a Bitcoin standard in the next 10, 20, 30, 40, 50 years. All right, let me know what your thoughts are below this video. Do you understand inflation? If you do, what do you think is the best inflation hedge? We'd love to hear from you in the comment section below this video. Thanks so much for watching, and see you here on this next one.